What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 36. It's July 31st, 2023. We made some trades today, so let's go ahead and get into it. First and foremost, let's talk about all of our important levels on the chart today. So we have yesterday's closing price represented by this purple line, and that price is at 35,591. Now this level is extremely important, and it's going to play a pivotal role throughout the entire session today. So we'll get into that a little bit later. Now, above yesterday's closing price, we have a zone that we drew based off of pre-market action with this green zone down here. And we also have a second zone based off of pre-market action with this blue zone right above it. And last but not least, we have our highest price for the day, and that's represented by this red line right here. And pretty much prices just were unable to break that level all day, and it was a major level of resistance, which played a pivotal role in me taking some of the trades I did today. So we'll get into that also. So let's go ahead and get right into it. And before I do any analysis, I want to talk about why I say that the title of this video is, if you don't believe that the market repeats itself, watch this. Now, this is what I mean, because look at what happened today on July 31st, 2023. I want y'all to take a mental snapshot of today's price action. All right. Okay, cool. Y'all got it? All right, now check this out. This is from July 14th this year. Now look at this and compare it to that mental snapshot that you took of today's price action, and tell me that they don't look almost like exact carbon copies. So on this day, July 14th, 2023, we had resistance above. This was also the highest price of that day as well, up here at 34,780. Off of that highest price, we pushed down into a trading range that eventually led to not the prettiest head and shoulders, but you could kind of see it in there. This is the head, this is the left shoulder, this is the right shoulder. Now we go back to today's chart. Look at what happened. We had resistance up above from the pre-market that prices hadn't been able to break through all day, and then eventually we came back into a trading range where we traded pretty much in between these lows at 570 and these highs up here at 660. We traded between that range for the entire duration of this screenshot, which covers the first, I think, what's this, 9:30 to 12:30. So the first 3 hours of the trading day, we did the exact same thing almost as we did a couple of weeks ago on July 14th. So it's kind of similar, where it's not necessarily a head and shoulders this time. It was a head and shoulders on the 14th, but today was more of a, if you want to call it a head and shoulders, you could, because you could say this was the head, this was the left shoulder, and this was the right shoulder. So not exactly the same, but similar enough where you like, hold on, I have seen this before. And then look at what happens after the head and shoulders. We bounce from the top of the trading range all the way back down to the bottom, but we respect all of these zones on the way down. Now, if you look at what happened on July 14th, we bounced off of all of these zones and we respected them on our way down, eventually to break out of this trading range that we were in for a good amount of time. So if we look at today, we have a very similar setup. Eventually, we did break out of that trading range, and from that point forward, we didn't really see too much out of that. As a matter of fact, we only broke out of the trading range by a little small tick, and it's kind of hard to see. So let's go to the live chart real quick. Okay, so let's just hide all of this real quick. We're gonna get into these trades pretty soon, but I just really wanted to break that down because it was crazy how I was looking at this today, because I thought it was deja vu. I said, look, man, I feel like I saw this exact same price pattern set up on a day before. So look at this. Let me hide these real quick. Okay. So let's just look at this and then compare it to our notes. Let's go back to the 14th. All right. So we were in a trading range, eventually broke all the way down. Now look at this right here. The trading range goes from these bottoms down here up to this top. And throughout the rest of the day, look, I didn't trade the rest of this, but look, we still stayed within this range. So this is what I like to call a range bound trading day. And days like this can be tricky if you don't really understand what's going on. And that's why I always say it's important to understand market history. So I actually have a video called Understanding Market History. So if you haven't watched that, make sure you go check that out, because it'll really touch on the points that I'm talking about today. So understanding what you see is the first step to actually being able to take good trades, because some of the trades that I took today, I only had the confidence to take those because I was looking at my notes from July 14th, this screenshot right here, and I was like, man, I know I might be taking a chance right here taking some of these trades, but based on what I've seen and based on what I've studied, it's a high probability that it should play out in this type of way. So without further ado, man, let's go ahead and get into the trades. But I just wanted to show that to you guys and let you guys know that if you study enough, you'll start to draw similarities between certain days in the market. Like, I don't know what it was in my brain that made that click, but it made sense. So let's go ahead and get into it though. Bring everything back up. All right, screenshot, cool. Yeah, but I got a lot to talk about today, so let's go ahead and keep it moving. So start our analysis today at 9:30 a.m. when the market opened. So we initially sold off, came back down to establish the lows for today's range, and then eventually pushed back up. We did create this higher low right here. I thought about going long, but the formation was just so ugly that I just didn't feel comfortable trading that. You know, but sometimes your best setups, they might look a little bit ugly, but if the characteristics of them still hold up, you can go ahead and take that trade. So I wouldn't necessarily say that I made the best decision by skipping that trade, but it's a decision that I can live with because it's plenty of opportunity all day. So if you feel like maybe the trade might work, maybe it might not work, it's nothing wrong with just skipping that trade. So that's what I did right there once that higher low got formed. But then we see prices spike all the way back up to the top of the blue zone, come back, create a higher low, and then that's where I started trading. So on trades 1 through 2, I took a small loss after buying the lows of the zone at first, but that was because I just cut that trade a little bit early because I wasn't quite sure if that higher low was going to hold up. But once prices spiked back through my original entry price, I took that same trade again, took it back up to the top of the zone. Now, I feel like I definitely could have held this trade a little bit more because the trend was up, and because the trend has been so strong these past like 4 weeks almost, it only makes sense to just hold that trade a little bit. But I was like, look, I went long at the bottom of the zone. My strategy says more than likely, Todd, if it gets back to the top of the zone, take profit. And one of my biggest problems last week was that I had so many trades that gave me a decent profit, but I was like, nah, I want more. But this week, I'm like, nah, look, if I get my setups and it comes back to my exit price, I'm getting out. That's that. So I feel like I made the best possible decision that I could at 2, even though it did give me a greater opportunity to catch bigger profits. But you got to find your decisions, lay it down, and stick with them. Because if you're flip-flopping out here, it's going to be hard to be consistent because one day you do this, the next day you do that. It's like, look, you got to do the same thing. You're either going to be right or you're going to be wrong. When you're wrong, you can learn from those. When you're right, you can also learn from that too. So that's one of the biggest lessons I took away from trades 1 and 2. So as we move on to trade 3, I use the same strategy that I used on trades 1 and 2. I went long at the support of the higher low. The only thing was you got to respect the daily high and the overall market context. We were trading within a trading range. So it's like, look, once you get to the top of that trading range, don't expect for prices to find support on the way back down. The trading range is the trading range. It's just like any other smaller zone, except this is just a bigger zone over a longer amount of time. But the principles of a zone still remain the same. Once you hit the top of the zone, you don't really want to go long too much until you get either a clear-cut long entry that you just have to take, or until you've reached the bottom of the trading range again, and then y'all are back on the way up once more. So always respect that. You know, you might see your setup, but you always got to remember what the overall market picture is telling you. So that's the biggest lesson I learned on trade 3, and I had to take a loss because of that one. So then let's move on to trade 4. So after trade 3, we shot all the way back down to the bottom of the trading range, and look at what happened. We literally stopped at the exact same price as the wick from 9:30 when the market opened. That is not a coincidence. That happens for a reason. And that right there is telling you that the trading range is legit and is verified. Because if it wasn't, if we had momentum this strong, we would have just kept moving, or we would have made a lower high or something that kept the prices going to the downside. But for them to reverse right here, That's the market telling you something. So you always want to take those things into consideration and just add it to your list and say, okay, let's see what that leads to and what can happen in the future based off of that. So then we see prices bounce right back up, reclaim yesterday's closing price, create a higher low. Now I was looking for the prices to come back and retest this one, and then I was gonna go long, but they never did. And sometimes when it comes to a higher low support retest, you'll just have that one touch when prices make a higher low, and then they continue moving. A lot of times they come back and retest it, but sometimes they don't. And this was one of those scenarios. So I just had to watch prices continue up, continue up, continue up. And then when we finally created a higher low up here, I attempted to go long as prices retested the support of the higher low, but my break even got hit, and that was okay. You know, I don't consider trade 4 to be the same scenario as trade number 1 and 2. On trades 1 and 2, it really made sense to get out at the top of the zone. But on trade 4, I'm just like, if we're in a trading range and we're on our way back up to the top of it, if we just made a higher low, I shouldn't get out at the top, well, at the bottom of the blue zone right here. I should hold this trade either to the top of the blue zone or to the top of today's highest price up here at the red line where we have resistance. So on trade 4, I was like, you know what? I'm willing to take a break even stop on this one because the potential probabilities of me being able to take prices a lot higher are a lot bigger than usual. So I'm willing to accept the risk. But, you know, break even trade got hit. It's not a big deal. I can roll with the punches. So then we push back down, come back to retest yesterday's closing price one more time. We find support down there, push back up into the green zone down below. And from that point, we've created a higher low. So you know me, I look to go long as the support of the higher low was retested. And then I held my trade to target. So I went long initially on trade 5, got hit for break even. But when I saw that prices were still kind of holding up and that the higher low was still being respected, I'm like, that's a no-brainer. I'm getting back in. And usually I would probably take this up to the top of the zone, but because of today's market context, I'm like, look, if anything, I don't know if it's coming all the way back up to the top of the range, but I have a very good feeling that it could definitely come back up and retest the top of the blue zone because it's retested that level before the last time that it came up from the bottom of the range. So, you know, I'm not trying to outsmart the market. If it did that last time, it's probably doing it this time. So I was able to hold that trade all the way up, not to the top of the zone exactly, because once we had this large candle to the upside, I'm like, me holding the trade after this doesn't really make sense because that right there is the momentum. When you want to sell a long position, me preferably, I would like to sell into strength. So once I saw that candle close, I'm like, I'm leaving like 6 points on the table, but if I just made 25, I'm good. Like, I'm going to be able to catch more trades throughout the day. So I just went ahead and got out right there on trade 6. So then we see prices push back down, retest the zone below, create another higher low right below the bottom of our blue zone, which eventually had enough momentum to push us all the way back up to the highest price of the day where we see our red line of resistance. Now, this is where it kind of got tricky for me because I tried to jump in front of the market too quickly because I knew that we were in a trading range, and if we come back to test the top of the trading range and we can't break through it, as soon as we get rejected, I'm going short and I'm trying to hold it all the way back down to the bottom of the trading range, or at least back down to yesterday's closing price. Now that was the idea I had, but I was way too early on my idea, and that comes back to something I consistently preach about on here, which is you could have the right idea in the market, but you got to make sure that you wait for all of the signs in the market to align with your overall idea. And then when that happens, you enter your trade and you ride it out. But you don't want to get in too early because you could run into some of the things that I did between trade 7 and 11. So let's go ahead and get into that. So on 7, I expected a strong sell-off after we came back and retested and got rejected from from today's resistance level, right? But like I said, I gotta wait for confirmation because I thought that once we had this push down, we wicked down to the bottom of the zone. I assumed that we would come back up and form a lower high at the top of the zone and then continue moving lower. But you don't really want to just jump in front of that. You want to make sure that you see prices come to your level, see how they react, and if you get the reaction that you want, then you can capitalize on it and get into your trade. But you don't want to hop in early, or else you expose yourself to taking losses like I did on trade 7, 8, 9, 10, and 11. So on trades 8 and 9, these were break even trades, but I still look at these as just bad trades anyway, because the reason I say that is I shorted the top of the zone, right? But it's the attention to detail that matters, because I had opportunity to take profit at the bottom of the zone. And I didn't have an idea about prices continuing down. And if I did, I wasn't quite sure about it enough to hold that trade and expect a breakout. This right here is a classic zone trading setup for me, where the trend is down. I identified that, which means that I only want to trade the zone from the short side, which means that I only want to go short from the top of the zone. And if I go short from the top of the zone, I take profit at the bottom. That's my strategy. I got it written down. I study it all the time. But that's just another lesson as to why you can have the best plan in the market, but it still comes down to execution. You can know what you need to do, but it's not just knowing that's enough. You got to know and you got to act. So that's very important. So in the future, whenever I'm in positions like this, it's like, look, Ty, yeah, you're getting a small profit taking it at the bottom of the zone, but you're getting profit nonetheless. And I could have took that trade 2 times. So even though it would have been 2 small trades, those 2 small trades together would have equaled one of my normal profit target trades if I would have been able to capitalize on both of those entries at 8 and 9, because both of those could have been very profitable for me. So just something I got to work on. And when I say attention to details matters a lot for zones, I mean like the smallest little detail. Like you really got to be on top of it. You got to be on it, because these zones can give you your profit back fairly quickly. Like, let's zoom in a little bit. If you see all of these wicks down here, you can tell how quickly the market kept bouncing back. Now, we can't see it exactly because we're looking at the screenshot of it, but in real time, it would hit these prices down here and then boom, it's coming back to the top to retest it again. So if you don't have your take profit right there and you're trying to get out of your trade manually, you got to have enough discipline to just take it once it's down there, and you can't hesitate, and you got to pay attention to every little detail. So that's the biggest lessons I learned on trades 8 and 9. Now I come back on 10 and 11 and I just keep making the same bad mistakes. And here's the thing: if you have trades that either are break even 2 times in a row, or they give you losses 2 times in a row, or they just don't work 2 times in a row, for you to come back and still try to take that trade is not always the worst decision, because sometimes it could work if the trend is just moving super slow and it's taking time to form. But even then, that comes back to patience. It's like, if it's moving super slow, why can't you just, wait until it breaks out? But that's another topic for another day. But basically, when it comes down to it, if you keep doing the same thing and it wasn't working before, more than likely it's going to continue to not work, and you need to step back, reevaluate what's going on in the market, and then decide based on that reevaluation whether or not you taking that same trade a 3rd and a 4th time really makes sense. And in this scenario, it didn't, and here's why. Let's read the notes real quick. Respect the signs of a zone breaking. Now, this is something that I really started to learn about maybe 2 weeks ago, and I was talking about it where I said, look, I do believe, based on my experience, that when a market is within a range, it's going to stay within that range. But eventually, it will break out. It's guaranteed. Everything has to break out of a range eventually. Even if the range lasted for 10 years, it's going to break one day. And usually the zone is going to give you certain price action signals and signs that shows you that the breakout is imminent. Now, what I mean is, if you're looking for a breakout to the upside, in today's example, right, you would look for some type of higher low or a double bottom or some type of bullish pattern that's getting formed within the zone, because that'll let you know that, oh, okay, we were in the zone, but gradually but surely one side of buyers and sellers is starting to become more dominant than the other. And in today's scenario, the buyers were starting to become a little bit more dominant, because, zoom in a little bit. So if we look at, let's start from this wick right here and just follow the price action. So you come back down into the bottom of the zone, right? Bounce back up. No real price action principles right there. It's just a range being respected. But once we shot back down on this wick and broke to the bottom and almost broke out of the range, but then quickly snapped back and came back and retested the zone, that right there essentially created a higher low. Now, even though it's a small higher low, a higher low is a higher low. Sometimes on a 1 minute, those higher lows might look small, but you got to remember that you're on a smaller time frame. So it makes sense that those higher lows don't look significant, but they still work. And in this scenario, looking at this higher low, if we follow it, we came back up to the top of the zone and created another higher low. So we have higher low number 1 right here, higher low number 2 right here. So me continuing to still short once I see higher lows is just something that I don't do, because most of the time when you see a higher low, if you're trying to short against that, it's going to be a bad day for you. It's going to be a long day for you too. And you're going to be very disappointed. You're going to look back on your chart at the end of the day and say, wow, why was I trying to short a higher low? I know better than that. So that's one of the biggest lessons I learned on 10 and 11. Even though you believe the zone is going to stay within the zone, always respect those signs that might tell you that something else is about to happen. Always respect the breakout. So then after trades 10 and 11, we eventually moved higher, retested the high price for today at resistance once again. And then, of course, because we're in a trading range, we immediately sold off, came all the way back down into the zone. And this is where I started to kind of catch my rhythm a little bit. So on trade 12, I shorted the top of the zone after seeing a lower high, but my break even got hit. And you know, that's okay. Sometimes it just happens like that, especially a lot more when you're trading the zone, because like I tell you guys all the time, the zone will stay within the zone more than likely. So if that's the case, sometimes prices will come back to retest your entry and then move on, and you'll see that trade work. And that's exactly what happened right here at trade 12. So when you run into situations like that, you just got to realize, hey man, that's a part of the market, and you just got to roll with the punches. But the last thing you want to do is try and chase these prices down. And I was very happy today that I wasn't, you know, too emotional. I was like, look man, it is what it is. I'm not going to try and revenge trade off of this. But what I will do is wait for another great setup to form, and then I'll think about getting in. And that's exactly what happened at trade number 13. So I shorted after seeing a bear trendline zone break. That's what these acronyms represent. And then I held the trade down to yesterday's closing price. That's what YCP represents in my notes today. So this right here was one of my best trades of the year, actually, because I read the market perfectly. And what's interesting is that I was actually talking about this strategy on Thursday and Friday, and then I went into the weekend and studied this strategy like crazy and really tried to break it down. And then I came back today and saw exactly what I was studying all weekend. So let me just share that with you guys real quick. These are the notes I was taking this weekend. So I'm gonna just read this, get it out the way. Feel like you could learn a lot from this. So in order for this setup, it's a bear trend line zone breakout. So in order for this setup to work, the market needs to be in a well-defined downtrend. Now, my definition of well-defined is satisfied whenever I see a series of consecutive lower highs like those that are shown at points B and point C in this example. So notice how we had our swing high at point A, came back to create a lower high right here at point B, and then once again another lower high at point C. So continuing on, every trader will have their own criteria for what they consider to be a downtrend, as you should. Be an individual. Don't try and copy me if you don't need to. But whatever your definition may be, just make sure that you consistently view this setup through those lenses. That's very important. You got to trade it the way that you see it. So, okay. After the trend line, after the downtrend is established, now you want to draw your bear trend line. The trend line should start at the swing high, and the second point should be the next lower high. After you connect these 2 points, then you extend your trend line throughout the rest of the market. Now, over time, I've learned that the sweet spot to enter in this setup is usually on the third touch of the bear trend line. So in this occasion, that would be at point C. Notice how we had one lower high, came back, touched the trend line again, came back, touched the trend line a third time. That right there is the sweet spot. And whenever the bottom level of the zone and the bear trend line intersect at this third touch, you now have the makings of a very good potential short entry. Now, this setup combines two groups of sellers. You have one, the short sellers that's looking to sell based on the touch of this trend line, right? And then 2, you have traders looking to short this in expectation of a successful breakout. So you have all the traders that saw prices break out of the zone and they like, oh, okay, we're about to break out and start trending. Okay. So the probabilities of a trade being successful increases whenever there are more than one group of traders participating in that move. So the more, the merrier. You always want to look for multiple confirmation signs, and that's the biggest reason why. So let's just go through a couple of examples real quick. This is from January 15th, 2021. Now notice how in this scenario, we were definitely in a downtrend, right? We had our lower lows and lower highs. So notice how we had our zone right here, came back, created a double top at the top of the zone, and then we created a lower high, came back to retest that. And then from that point forward, we broke out of the zone, came back, retested that intersection of the trend line and the bottom of our zone. And that right there is your textbook entry for the bear trend line zone breakout. Now, once again, we have the same thing occur at point B as well. So eventually, throughout all this price action, we established lows down here at 30,740, came back up to around 800 almost to the top of the zone, pulled back, created a lower high. From that point forward, you can create your trend line, extend it throughout the market, and then as prices come back, retest that trend line as well as the intersection of the zone. Then you look to go long. So that was from January 15, 2021. This is from the 14th, same scenario. We're in a zone, downtrend is established. We see our lower high get created. Then from that point forward, we draw a trend line off of A, B, and then we wait for that touch on C. If that intersects with the trend line and the bottom of the zone, that gives us a very good signal to take the short trade. So that's what I was studying this weekend, and to be able to see that coming to fruition was very satisfying. You know, it just lets me know that as long as you keep working in the market, you'll pick up on different strategies and different details and be able to actually use it in real time to make real profits. So that's pretty cool, I think. Now, going back to what I was talking about when I say that understanding market history is key, trade 13 would have never been possible if I wasn't looking at my notes and studying the comparisons from July 14th, that day I was showing you guys earlier. Because usually, you guys know me, if I short, I'm going to short from the trend line, I'm probably going to take it either back down to the next zone at the top of that zone or back down to the bottom of the zone at best. But I would never hold it past multiple levels because that's just not me. But on this day in particular, I was looking back at the trades from July 14th. So let's go back to that real quick. And I was like, we played around in that range for a minute, but we eventually broke out. And we broke out once we saw all of the signals. We had a head and shoulders, a double top right here, followed by a lower high, and then we came back to retest that lower high. So it made sense as to why we should be breaking down on that specific day. And on this day, it also made sense too. We had bounced off of the initial levels of resistance up here, created lower lows and lower highs, broke through multiple zones, and then came back to establish a bear trend line zone breakout. So I was like, you know what? If this was any day to hold my trade to the best possible level, this would be it. So basically took my setup, held it all the way back down to yesterday's closing price, and literally got out at the almost exact bottom of that move. So one of my best trades that I took in a while. So after trade 13, we see prices come back, retest that trend line once again. So if you missed the first touch, you could have got the second touch also. Continue moving down, pushed through the zone, broke out of it, had a successful breakout retest, and then we moved our way back down to yesterday's closing price, and we established this consolidation zone down here. Now, throughout this zone, I had kind of stepped away from the market a little bit because on trade 13, I was just so happy after that. I was like, you know what? I'm done for the day. But I couldn't help it. I came back and I started looking at what was going on, and I was like, man, this is an easy consolidation range to trade. But the problem was I got into it way too late. I came in like maybe a couple of minutes before I took trade 14, and I just saw the zone, I boxed it up and just put my order there and was like, yeah, easy trade. But first of all, the lesson that I learned from this one is if you want to stop for the day, then stop. Don't come back. Be disciplined enough to stick to your plan, whatever that might be. You either have a plan to trade all day or you have a plan not to. Whichever one you choose, stick to it. Like I said earlier, You don't want to flip flop back and forth too much between what you want to do and what you don't want to do. Pick one, stick to it. So that's the lesson I learned right there. And also, another lesson I learned, if we go back and read the notes, was just like I talked about earlier, respect the signs of a zone starting to break. And we had the signs right here because we had a push to the downside where it was almost a breakout, but this was a false breakout that eventually led to a higher low. If you go back and look at 8 through 9, that was actually the exact same price pattern setup. Kind of pushed through the zone a little bit, false breakout, came back, created a lower high, and then broke out to the upside for real. We did the same thing down here where false breakout to the downside, pushed back into the zone, created a higher low, and this was actually a higher low that got retested once more, created a second higher low, and then eventually broke out of the zone, but just had a false breakout. So I should have been out of this trade as soon as I saw this next higher low. Like once I had this first one, I really should have been out at that one, but 2 of them back to back and I'm still not getting out. What am I doing? But luckily I didn't take a full stop loss on it, because once prices broke above the zone, I'm like, Ty, what are you doing? You see those higher lows, just get out. So that's what I did right there. And we eventually established a double top right on top of the zone. So if you were ever looking for a false breakout, if you have any type of reversal signal right above the zone, the probabilities of prices coming back into that zone increase substantially. So I was like, okay, we got the double top. Then I saw the lower high. I'm like, interesting. Now we're coming back down to the bottom of the zone. We came back to retest that trend line once again. So you know me, that's that third touch right there, and it's the intersection of the bear trend line and the bottom of the zone. So I said, perfect. I know exactly what I'm looking at. It's a bear trend line zone breakout. So I went short right there at 15. And this was a decent trade. Only thing was, my exit could have been way better, because I don't know what it is about me, but when I'm trading and we start getting towards the edges of a range, I start getting paranoid, because I always feel like the market is going to try and come down to test the bottommost level, but it's going to reverse right before it gets there, and it's going to give back all the profits that I made. So I always try and get out early. But in scenarios like these where every single thing on the chart lines up and tells you that it's going down there, you just got to stick with your trade. Because if we look at all of the signs, we had our it's an ugly head and shoulders, but a head and shoulders nonetheless. So we had our head and shoulders. We started making lower lows and lower highs. We respected bear trend line zone breakouts all the way down, broke through all of our zones, came back to get under yesterday's closing price. So here's another nugget too. If you're below yesterday's closing price, you're in a downtrend. Now the amount of price that, the amount of distance between where you're at right now and where the yesterday's closing price is tells you the strength of that downtrend. But if you're below it, the trend is down. If you're above it, the trend is up. So when we're below it, that's just another sign that, yeah, the downtrend is strong. And then we had a double top false breakout that led us to the bottom of the zone, that led to another bear trend line zone breakout at 15. Everything on the chart is pointing to the downside. So in a scenario like that, you just got to hold it. So yeah, 15, it was decent. You know, I made profit on it. I'm not mad about that, but I'm disappointed because I could have got like double the amount without having to put forth double the effort. So it's the little small trades like this that really just make me keep working and trying to get better. So that was my last trade for the day. And overall, man, I would say at first today was kind of rocky. It was kind of shaky, especially when I went through this rough patch between 8, 9, 10, and 11. That really kind of hurt me a little bit. Not as far as like losses and finances. It wasn't that bad. I could stand those losses, but it was the mental impact. It made me just say, man, I don't know. I feel like I'm doing the right thing, but I just keep being wrong. So you always want to make sure that you focus on your biggest losses. And that for me is just my main focus going forward. Focus on zones and really pay attention to the detail. So my goal going forward, the next time I trade the zone, I just want to trade it perfectly. If I'm shorting the zone, I'm going to short it at the top and I'm going to take profit at the bottom. And I'm going to come on here and do a trade review and I'm going to tell you guys, yeah, I did what I said I was going to do. So that's my goal. And then besides that, my other biggest goal is to just continue to study and try and figure out, you know, the similarities between different days in the market. Because me being able to go back and study this weekend, I saw July 14th as I was scrolling through my charts, because I was just going back through all my notes throughout July, because I'm getting ready to do a monthly review, so I need to do that anyway. So me being able to recognize that helped me today. So going forward, I just want to continue to keep that up. And, you know, hopefully you guys learned a lot today about, one, the fact that the market really does repeat itself over and over. Two, I hope you guys learned about bear trendline zone breakouts. And three, I hope you guys learned about trading your levels, well, taking your trades from the proper levels and getting out at the proper levels, and understanding when the zone is gonna break. Those are the main things that I wanted you guys to really understand today. So I hope you learned a lot, because I did too. I'll be back tomorrow. What's that? It's a new month, man. It's gonna be August 1st tomorrow. Year is going by quick. But I'll be back somewhere between 9:30 and 9:40. But until then, you guys, take it easy.